What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market. Hopefully you guys are doing well. I just got in. I was out for 2 hours and 10 minutes doing some exercising, walking. That's all I did was walk, people. Decided to do something. So, what happened today? So it says here, the S&P 500 snaps 4 week losing streak and latest volatile week on Wall Street. I wonder what happened. Let's see. It might have snapped, but it didn't go up much. But I would take what I can get at the current moment, right? Again, like I said, I just came in from being out 2 hours and 10 minutes exactly. So hopefully you guys are staying on top of your health as well. Health is wealth. Even though I'm talking about investing, but what good is it if your health sucks? Drink your water. So it says U.S. stocks climbed into positive territory on Friday as investors weighed mixed messages from the Federal Reserve, while President Donald Trump indicated he'd retain flexibility when it comes to a reciprocal tariff plan set for April 2nd. So, the first thing that catches my eye, it says it climbed into positive territory as investors weighed mixed messages. I wonder what investors are they talking about? These big hedge fund investors? That's what I think they're talking about, because they're the movers and the shakers in the stock market. They can make things go up, they can make things go down, in my opinion. Either way, the Dow Jones Industrial Average edged above the flat line while the S&P 500 rose 0.1%. The tech-heavy NASDAQ Composite gained 0.5%. All three major averages fell by nearly 1% earlier in the session. The S&P 500 and NASDAQ, both of which entered correction territory during a downbeat start to 2025, snapped 4-week losing streaks. Stocks came off their session lows after Trump said, "I don't change." But the word flexibility is an important word in a response to a question, or to the question of a retaliatory tariff plan expected on April 2nd. Most of this week's gains came after a stock market rally followed the Fed's decision on Wednesday to stay the course for 2 more rate cuts this year. We all know when the rates go lower, more people invest, they spend more money, they buy cars, they buy homes, they put money in the stock market, right? If you don't know, now you know. So Fed Chair Jerome Powell also reassured investors that the economic impact of Trump's trade war seemed manageable. Keywords, seemed manageable, adding that recession risks remain low. However, by Thursday, the underbelly of the Fed's decision, which included forecasts for higher inflation and lower economic growth, 2 concerns that have deeply rattled markets, started to weigh on Wall Street, sending stocks lower. That is true. And more companies have said they are feeling the effects of tariff-related uncertainty as earnings continue to trickle out. That is true. These companies got to be feeling it. Nvidia's feeling it. Amazon is feeling it. Everybody's feeling it because everyone's stock price is going down in a big way. Amazon, like I just said, what about Microsoft? Has Microsoft gone down? Yeah, Microsoft is down from its 52-week high. Everybody. So these companies are feeling these effects. But will things remain the same? I don't think so. Will they remain this way? I don't think so. Once they get this whole trade deal under control, we may see a bounce back to highs, right? So it said here, FedEx and Nike stocks plummeted on Friday as investors reacted to comments from both companies about the economic outlook, with FedEx slashing its 2025 forecast and Nike continuing to leave gaps in its outlines for a turnaround. Wow. Well, Nike it went down $3.92, so I wouldn't say it plummeted, but it is down like all the other companies. FedEx took a nice hit. They went down $15.88 today. Oh, yeah, and they're really down. Like their 52-week high for FedEx is $313, and the stock is now trading for $230. Yeah, this is what's happening, people. And that's pretty much it, for the market. I would say the market right now is reminding me of like a relationship that you need to let go of, or not that you need to let go of, but you're thinking that it's not going to work and maybe you should leave. But then something says, no, don't go. It's going to get better. That's where we're at with the market. Don't go. It's going to get better, right? Just continue to dollar cost average into the stock market. Make wise investments. Make sure you do your research. If you're uncomfortable doing your own research, then contact a financial advisor, someone, and have them invest your money on your behalf. Right? Continue to lower your debt to income ratio. Get out of debt, people. Get out of debt. Debt is holding you back. And if you don't have the money to invest, that means you need to get a higher paying job, get a second job, learn a new skill that can bring in more money, get your new job. Again, you have to learn how to make your money work for you. That's the key. And the other thing is, this is not easy, people. Investing is not easy. Saving money isn't easy for everyone. Being disciplined is not easy. Getting out of debt is not easy. I would say getting rich probably isn't easy either. Because getting rich, getting out of debt, losing weight, being smart about your investing is not easy. And you may get there, but can you maintain it is the question. So you also have to learn how to maintain everything that you've created, the weight that you've lost, the debt that you've done away with, how to stay out of debt, how to keep the weight off, how to continue to make wise investments, how to maintain that good paying job, how to make the money that you're making from that good paying job to work for you so you don't physically have to continue to work hard. You can now have your money work for you. It's not easy. It's not going to happen overnight. It takes time, people. So, don't think that this is going to start working for you in 3 to 6 months. This is a process. So, and then the more you put into it, the more you're going to get out of it. And then when it comes to investing, that compound interest over time and over years that your money sit in those investments, sit in your 401k, you will see how you can get to a point, the earlier and sooner you start, you can live off of the interest that your money is generating and not even touch the principal before you transition out of this world, right? But it takes time, it takes discipline for this to happen. So you have to put in the time, you have to put in the work. And the work doesn't have to be physical work. It's mostly mental. First, you have to become disciplined. Well, first, you need a plan. You can't do anything without a plan. No, actually, I think first you need to decide that, okay, change is needed. And then when you figure out, what change needs to be made in your life in order to get to where you want to go, then you need to come up with a plan. And then the more you think about that plan, then you need to execute that plan, because you can't just sit back and think about what it is that you want to do and what you need to do and then not do it. You have to do it. And then the thing is, when you start doing it, you have to stick with it. You have to continue on. You know, the same way you got something is the same way that you're going to have to keep it. Did that make sense? The same way you got it, the things that you did to get what you got are the things that you will have to continue to do to keep it. I think that made sense. Either way, you can't just become disciplined, become smart with your money, get out of debt, and then stop doing all those things once you get to that place and once you reach those goals. You have to keep it up. You know, you have to keep exercising. You have to keep eating right to keep the weight off. You have to continue to think more positively. You have to continue to invest your money. You have to continue to just be smart. You have to learn how to start ignoring certain people, places, and things to get to where you want to go. Yeah, that's it. But I think that's it. All right, so like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. Disclaimer, I'm not a financial advisor, nor am I pretending to be one. I'm just someone on YouTube making videos. So any and all information on my channel is for entertainment purposes only. So please consult with a financial advisor before you invest any of your hard-earned money, people. Yeah. Oh, I forgot to cover my stocks. Nvidia took a hit today, went down 0.7%, losing 83 cents. Palantir went up $3.57 today. That's good. Broadcom went up $1.12. That's good. Tesla went up $12.45. That's good. My information technology ETF, FTEC, went up 52 cents. I'll take that. I'll take it. Damn it. I'll take something over nothing. SPLG, my S&P 500 ETF, went up a whopping 1 cent. I'll take it. I'll take it. I would say this right now, this moment in time, is reminding me of 2022, when the market was doing similar things. And it scared me. So I stopped my dollar cost averaging investment around the month of June. And that is something that I regretted. Like now I'm telling people to buy the dip. I did not buy the dip, and I should have. And then towards the end of 2022, things shot up. So I missed out on the gains because I did not invest. So even though prices are down, I'm doing my research on Nvidia, Broadcom, Palantir, Tesla, and there's nothing fundamentally wrong with the companies. I don't see anything wrong with their balance sheets. I'm tracking reports that are coming out. I haven't heard anything bad, so therefore I'm continuing to invest my money into those companies. But I'm only investing 20% of my monthly budget into those individual stocks like Nvidia, Palantir, Broadcom, Tesla, and SCHD, right? And 50% of my investment goes into my S&P 500 ETF, which is a broad ETF, which consists of the 500 largest companies in the United States, right? Which includes Broadcom, which includes Nvidia, which includes Tesla, it includes Amazon, it includes Microsoft, and it includes Google. I'm investing in all of those companies within SPLG. And then I have 30% of my money going into my information technology ETF, which is FTEC, which also has Microsoft, Amazon, Google, Nvidia. So I'm double dipping. Either way, as you can see, not all of my eggs are in one basket. Not all of them. I haven't invested into that one, so I'm not going to talk about that one. So either way, so yeah, I think that added up to 100, right? 50% into my SPLG, 30% into FTEC, and 20% into my individual stocks. That's 100%. Right. So that's that. So you guys come up with your own strategy, or you could invest all your money if you want into the S&P 500. It's up to you. Or you can find a broader stock market fund to invest in. There are several out there that cover, small cap, mid cap, micro companies. And you're pretty much investing into the whole entire stock market. And that's kind of safe to invest in. All right, so I'm going to end this video. All right, so you guys have a blessed weekend. Peace. Because I've talked too much already.